There is a lot going on in the world, in case you haven't noticed, and a lot that can affect the semiconductor supply chain and the entire world economy. But before we get into that, we're going to show you a chart from our friends over at fiscal.ai. We use fiscal.ai every single day here at Chipstock Investor. We have an updated chart for you from Marvell Technology showing their data center revenue absolutely going ballistic. Marvell taking a victory lap in data centers.
Besides taking a look at company financials and visualizing them, fiscal.ai is a complete financial terminal, complete with things like earnings call transcripts, SEC filings, which you can now also search. All of that we used for this analysis of Marvell after their latest Q4 fiscal year 2026, which ended in January, just a little over a month ago. Earnings update. We'll come back to this in just a sec. But if you use our special link, fiscal.ai/CSI, gets you 15% off any paid plan.
Check it out. We'll come back to this chart in just a moment. But before we discuss Marvell in depth, we need to briefly touch on what's going on in the economy right now. And we'll do that with the help of our hierarchy of the economy chart. Nick, tell us what's going on.
You probably all already know about the shortage in data center memory products, which is starting to affect other areas, other parts of end markets, especially in consumer products. So that is a disruptive event that we expected in 2026. But now pair that with suddenly rising oil prices, a lot of that because of the conflict in Iran, potential full closure of the Strait of Hormuz, which is responsible for ferrying something like a fifth of the world's oil supply. That is going to especially impact economies in Asia, where semiconductors are manufactured. And those economies rely heavily on crude imports from the Middle East. This is suddenly a situation that you'll want to be aware of because we now have 2 points of disruption in the semiconductor supply chain, as we've been talking about over the course of the last year. Here you have it. This is an area of the supply chain a lot of tech investors weren't paying attention to and suddenly now very much are. Maybe this blows over very quickly and oil prices come back down. There is, in fact, at this point, still plenty of supply out there on the market, but that could change if the conflict gets prolonged for longer than expected. So keep an eye on this. In the meantime, let's get back to Marvell Technology.
And just a refresher on where Marvell fits into the semiconductor supply chain. This tool is over on our website at chipstockinvestor.com. Marvell, fabless chip designer and a provider of intellectual property. Okay, back to this chart from our friends over at fiscal.ai. In blue, you see data center revenue, which is now approaching almost 80% of revenue for Marvell. In orange, communications and other revenue. We expect that in the coming years, this data center revenue is actually going to be even more than 80% of Marvell's revenue.
And there's going to be an immediate impact this new fiscal year that just started. It's fiscal 2027 for Marvell because their fiscal year ends every January. This is the 12-month period, ended in January 2027. And the reason why that blue bar is going to keep expanding as an overall percentage of sales is because they keep making more acquisitions and investments into data center revenue. They keep deprioritizing other legacy parts of their business like consumer applications. They just sold the automotive Ethernet business to Infineon, as we just mentioned. And so this is very much headed towards an all-in data center and AI data center infrastructure play. Now, on the earnings call, management used acronym soup like crazy, and you may be wondering what all of that meant. XPUs, probably one of the more common acronyms now. These are custom accelerator chips like a GPU, but custom designed for a very specific data center customer application. In this case, Amazon is Marvell's big customer, but other things, PCIe, CXL, DCI. Let's just break it down in simple terms, Kasey. What exactly does Marvell design and sell to data center customers?
You know how much I hate acronym soup. And you want me to break this down simply?
Yes, very simple. 3 buckets.
3 buckets, exactly. We'll use this chart that you may be familiar with. We customized it for Marvell. Marvell's share of data center compute fits into 3 buckets. Logic, as Nick mentioned, the accelerated processing units, custom silicon. 2, networking, the interconnects and switching that connect different parts of the data center. And I'll just mention with that addition of Celestial AI and XCon, they're not only doing the connecting of products within the data center, they're doing scale up as well. And then finally, their products also fit into the storage portion of the data center. Storage accelerators, which includes those CXL units from XCon. And maybe we should clarify as well on the storage portion, Marvell makes products that interact with the storage itself, not the memory chips. But this isn't an end market that Marvell is all alone in. Of course, they have a ton of competitors.
Yeah, the biggest comparison would be Broadcom, which is, as its name still implies to this day, much more broadly diversified by product and also still end market, even though data center is becoming a very large outsized portion of its semiconductor segment as well. And if you've been with us for a while, you probably know we have affectionately referred to Marvell as Baby Broadcom in the past. It's not a complete apples to apples comparison, but I think the comparison has stuck as the years have gone by. Is Marvell catching up to Broadcom? What we have here in this chart is Marvell's total revenue, because they are all in on semiconductors, compared to Broadcom's semiconductor specific revenue, because they have that 40% part of their business that is also enterprise infrastructure software. So that is just Broadcom's semiconductor revenue on the right, the majority of which is now also AI data center semiconductor solutions. You probably heard last week, Broadcom CEO Hock Tan also expecting massive growth for Broadcom as well. They're expecting something to the tune of 100 billion plus in revenue from these AI semiconductors next year, in the period that would roughly correspond with calendar year 2027. So Marvell, the smaller player, but that doesn't mean they are growing faster than the biggest companies in this market, which, as you know, include more than just Broadcom and Marvell these days. NVIDIA declared itself the largest Ethernet networking company in the world after its earnings. AMD participates. You have, of course, Intel, even the photonics IDMs, Coherent and Lumentum. There is a lot going on in this slide in the whole custom semiconductor for AI data centers and the related networking interconnect portion of this market. So Marvell, just one company that you should be paying attention to at this particular stage of the growth cycle.
And if you want to break down all of those companies and AI data center networking, make sure you check out this video right here. We'll link it. We did just a couple months ago.
But back to Marvell specifically, what are the merits of investing in this company at this point? Additional point number 1, they put in some work last year to increase the health of their balance sheet.
Yes, they did. In purple, you can see their total cash and cash equivalents on balance. They had a large influx of cash, mostly due to the sale of that automotive Ethernet business to Infineon. So now cash on balance, $2.6 billion. They do still have some long-term debt in yellow, short-term debt in red, but much healthier balance sheet than in the past. Marvell has been spending a lot of its cash in R&D work, and then also been making some acquisitions, Celestial AI, a big one, and then as well as XCon. Another area that Marvell is putting some of that cash to work is in share repurchases.
And in this slide from fiscal.ai, you can see almost 2.3 billion in stock repurchases made this last year. That didn't do much to increase their free cash flow on a per share basis, though. As Kasey mentioned, a lot of investment being made. And so the good news here, I would say the upshot is, despite the elevated round of investment that Marvell made, they were actually able to keep that free cash flow on a per share basis flat. They were able to decrease their share count a little bit. So that's the good news, better balance sheet. And it could be that free cash flow per share has another sizable run higher this year as some of that investment work, some of that R&D and customer sales, especially Amazon, start to actually turn into bigger scale up of revenue.
So what kind of growth rate is currently baked into the stock price? Here's a look at that via our reverse discounted cash flow to get us to the price that Marvell is when we're recording this, around $90 per share. Using that free cash flow per share rate of $1.61 requires a growth rate of 30% over the next 5 years, terminal rate 5% thereafter.
So in conclusion here, you can obviously ascertain from this that Marvell is not a cheap stock. There is the expectation for a period of elevated growth over the course of the next 5 years from this current round of AI data center CapEx spend from the hyperscalers. However, a lot of that expected growth over the next 5 years could actually come this year and next through fiscal year 2027. And then by fiscal 2028, management has this expectation that they'll start getting some nice growth kick in from some of the more recent acquisitions like Celestial AI. So some puts and takes here. Obviously, Marvell benefiting in 2026 from its hyperscaler customers. They look like they're in pretty good shape, but some momentum definitely priced in to the stock at this point. Maybe not as cheap as it was when we called it out again late last year as one of particular note after another sell-off. But management keeps increasing the guidance, expecting revenue to nearly double over the course of the next 2 to 3 years. If that's true, well, Marvell shareholders could have a good one on their hands here.
Make sure you check out fiscal.ai/CSI for that 15% off. And if you have not watched that video on AI data center networking that we mentioned earlier, we'll link it right here at the end of this video. Check it out and see what you're missing.